Hey, it's Amy Nicholas. Welcome back to the channel. In today's video, I want to share lessons learned about overtrading multiple red trades in a row and just, where I see myself going forward with this second phase of my trading small positions by doing these 20 trade experiments. And right now I'm in the 20 trades of trading 2 shares per individual trade, always with a stop loss. Today, I kind of experimented a little bit and, was kind of willing to maybe go red on certain things because I was experimenting. So this morning, the first trade wasn't an experiment, but then I kind of started with the next one doing that. So, I did, of these 20, which I'm doing over a period of days. I'm not trying to finish 20 trades in a day or two, but just however long it takes is however long it takes. And today I did 8, 9, 10, and 11 of my 20. So the first one I got into was shorting Tesla with TSLQ on the ETF. And this one, it kind of made sense to me because Tesla was definitely selling off this morning and, people were taking profit. So you could see that there was heavy selling volume. I think what happened on this one, it just hit my trailing stop. So I was correct about the movement. It, kind of had a little spike up, down, whatever. And because I had the trail stop of 75 cents per share, it kicked me out. So I lost $1.14 on this one. And I wrote that I, maybe should have tried with that first trade of the day to do a dollar trailing stop, just because of the nature of Tesla. This is like a stock that you have to give a wide stop because it's going to fluctuate and, be erratic sometimes. So I was like, okay, whatever. So I was in at 41.04, kicked out at 40.47. So then I was looking at Palantir, and Palantir showed some signs of, looking a little bullish. I was kind of watching and waiting for it to cross like $96. It had sold off on the open, like a lot of things did. And once I saw that it was moving, I'm like, okay, cool. Like I'm jumping in. So I jump in, I'm green right away. I get in at 96.73. I'm green. It's going up and up and up. And this was right before 10 a.m. And I'm watching my guys I watch on YouTube, Bull Bear Trading, I think it's called, or Bull Bear Traders, something like that. And they were mentioning that this announcement was coming at 10 a.m. about the housing crap, whatever. Every week there's some piece of news that's literally, I swear, just meant to be spoken so that the markets can have some weird fluctuation. So, some data report, something. And I remember thinking, should I get out while I'm up, just flatten this position, just, take and go? Or should I ride it out and see what happens? Well, I took the wrong decision. I wrote it out, and sure enough, the stock started turning around and dumping. And, I guess this news was unfavorable in some percentage way or whatever. And everything started selling off actually right then. And so instead of if I had walked away on this trade, I would have been profitable on the day. I would have made up my loss on the first trade. I would have walked away with profit on the second trade. Now, granted, when I was debating on what to do, I might have been at like break even or slightly above, but I wish that I had just gotten out, because anytime there's news, right, it can change things very quickly and erratically. And so it ended up stopping me out at 96.54. So it was only like 20 cents barely of where I got in at, but because I had gone up so much, the trailing stop kicked me out for coming back down, and I had a loss of 38 cents, nothing crazy. But had I just listened to my gut, I made a conscious decision. Like I didn't not have a plan. I did. I just chose one direction, and I wish I had chosen another, because I could have walked away. So what ended up happening is I felt like the next 2 trades I took, I overtraded because I'm trying to come back. I'm trying to make up for it. And when that frustration starts to build, I think you just don't make as good of decisions, right? So, in this one, by the way, on Palantir, I had a $1 trailing stop on that one, just because it's a higher price stock, and I knew it would be better to have that extra, width or whatever. And then, and I definitely put, should have exited before the report. And so the third trade of the day, This time, instead of trading the ETFs like I normally do with Tesla, I actually said, let me just trade Tesla, the stock itself, in order to go long, because the TSLR ETF is so low priced. It's challenging to get a dollar plus take profit on it because Tesla itself has to move so much. So I was like, let me go long on Tesla. It was starting to come back up. It was looking good. And I got in at 277.26. And this one I set a trailing stop at $1.50 per share, with, again, just 2 shares. And I was sort of hoping for like a $2 take profit. Well, what ended up happening is the stock was green. I got in, it was green, I was up, and it just quickly like flipped a switch and just went the other way. And it hit my trailing stop. So that one I got stopped out for 3 reds in a row at a loss of $1.70. And I said I could have exited, but I saw no obvious reason to. And that's just following my rules. Like, I don't necessarily think I did anything incorrectly on this trade. It was one of those things with Tesla, and I'm sure you guys saw this today, where things were jumping around, bouncing around, erratic, up, down, up, down. Like, there was not a clear direction at specific points in time this morning. It was like, hold your breath, on every trade. It just felt like that. So yeah, it is what it is. And this is where I should have just walked away. In fact, I was going to walk away, and I looked at Tesla one last time and I got mad because of course it went up and it jumped to freaking like 279. And I had gotten in at like 277 on the previous trade, like I said, and I got stopped out. Then it jumps and it goes all the way to 279. So in my brain, that wasn't thinking very clearly. I'm like, oh, well, I could write it out to like 280-ish, whatever. I never should have taken this trade for the 4th and final trade, because it was too high. It was too extended. I got in at like 279.31. Like, what was I thinking? I wasn't, clearly. And there was a part of me, though, that was like, I wonder if I changed it from a trailing stop loss to a fixed hard stop, would I have gotten kicked out on that other one? So I wanted to experiment again. So that was like kind of my reasoning to myself at this time of doing this 4th trade, was like, let me put in a hard stop of $1.50 each. So I knew like I could potentially just straight up lose $3 on this last trade. And yeah, so I think I was in it maybe like 10 minutes, if that. And then of course I got stopped out because there's red day across the board. And I'm like, okay, what's the deal here? Because I did these 20 trades, experiment with the 1 share, and my win rate was way better than where I'm at thus far with the 2 trades, or 2 shares per trade. And thinking back, I'm like, I didn't deviate, I didn't experiment really. I stuck to my, 75-cent trailing stop. I was quicker to take profits, I will say, on those other trades. Right now, I was kind of like using this second experiment as, let me work on my exit and try to get higher gains. Now, granted, the other 20 trades I did with the 1 share piece, I ended up profitable on that. So maybe it was in my best interest to cut some of these winners off, or else they might have turned against me. And in some cases, some of the trades I did, I was only like, I was nowhere near, a risk reward ratio that made sense. Like, maybe I was risking 75 cents, but I was, only getting like 30 cents or 25 cents profit. But my win rate was higher and I was profitable. So I think for the next set of trades I do, or excuse me, the rest of the ones in this 20 trade series, as now I've done, what did I finish at? 11. Okay, so I've got 9 trades left on this 2 shares per trade. I think I'm just going to go back to my rules of, this is what it's, we're not going to deviate. We're not going to experiment. We're just going to stick with the 75-cent trailing stop and the, I'm still buying the 2 shares. Like that never changed. Although I did consider this morning buying 2 shares into a trade at different price points, but I was like, no, I'm not going to complicate it. There's a part of me that like, with the 75-cent trailing stop, it's sometimes good enough depending on what you're trading. And some of these volatile, wildly moving stocks, it's like, oh, should I take that trade? And some of the ones, I've done recently, like today with Palantir, it was like, oh, I probably could have, well, that one wasn't so much more of a stop. That one was more of, Amy should have got out before the news came out. But the Tesla one, like should have had, I think with Tesla, having like maybe a $3 stop would have been, $3 trailing stop would have been ideal. But, it was one of those things where I was like, I felt like after the first two trades, I was wanting to just play and experiment, see what would happen, But, the name of the game, we want to be profit over loss. And so if it worked better for the first 20 trades for me to be profitable by sticking to some rigid trailing stop, then, maybe that's what I got to go back to. It's just one of those things where you're like, man, can I just catch a win? I think this is day 3 now of doing the 2 shares. Yeah, because I started this on Thursday last week. I took Friday off and I started, my 2 shares on Thursday, and three trading days in a row have been red. And it's kind of like these small errors, that I'm seeing where some of the time I should have exited the trade sooner. Some of the times, I'm getting in too late. And really, I think the getting in too late part was mostly today with that last trade. But it's like, okay, if you can just kind of fix some of these little errors, then you can be green. Like most of the trades I've taken of these 11, I'm usually green right away. And maybe it just doesn't go far enough up where it makes sense to take a profit. So I've been telling myself to be patient, let it play out. And unfortunately, lately with this volatile market, that decision isn't working so well. I'm getting stopped out eventually. So then it's like profits turning into losses. There's been one trade that worked well to do that. And that was my trade yesterday. That I did. Oh, and this trade I didn't review yesterday because I was still in it. When I made the video, where are we? Okay, so this was Monday. My final trade of the day, Monday, was on TSLQ. Is that right? Wait, hang on. TSLR. Yeah, TSLR. So I went long on Tesla like yesterday after like 8 a.m. my time. So like 11 a.m. after that. And the intent was to make up, if I could, some of the losses I'd had that day. But I also was very much like Tesla was bullish yesterday, and I wanted to sit in a trade and wait out the next leg up. So yesterday I got in at TSLR. Where was I at? Where's my in? Okay. Oh, 1694. Okay. And I bought 2 shares, and then I waited like all day. It took 4 hours for this to play out. So Tesla would have been around it was ranging like 273, 274. And I could see it going to 278 was kind of like my target. So that's why I got in with the TSLR going long in the ETF. And at 1242, supposed to be 342, Tesla finally started making its move the end of the day. It was like, oh, nice little short squeeze, right? And so it went up to 1726, and I decided to sell one of the shares so that in case it really wasn't turning against me, I could still get more profit on the second share. So then I was correct in the sense of like, let me just wait. 7 minutes later, I'm getting out with the second share at 1744. So profit of 32 cents on one, 50 cents on the other, 82 cents or whatever. And this helped my average for the day because this was my 4th trade yesterday, and I went 2 green, 2 red, and I was still red on the day, but I made up like a significant amount in terms of percentages for my loss. So I was only at a loss of 90 cents yesterday instead of like 2 something. So yeah, so that worked well. And what I learned from that, of holding that day trade all day, like a full, 4 hours, was that sometimes if you want to get these higher gains, you might have to just let something play out, right? So yeah, that didn't happen today. The trail stops were hit, the regular stops were hit. And I don't think I was the only one that was dealing with this today. I think a lot of people were shaken out with these erratic market movements. So, live and learn. I'm not beating myself up over it. Certain things I wish I could have did differently, but there's no sense in like shoulda, woulda, couldas, right? You take your lessons that you've learned, you use that for your next trades. You use that like for data of like, okay, if I hit this situation again, like for example, breaking news, if there's something federal being announced, get out of a trade. Don't try to jump in one right before, and don't stay in one, especially if you're in profit like I was. Because like I said, I could have ended my day after that one and been green, been profitable, whatever. And, I think for me right now, it's better to not experiment too much and just stick with what already worked for the last 20 trades. I'm just going to go back to my, fixed rules, whatever, and just stay with that. If I get stopped out, I get stopped out. But at least I know now kind of like a little bit better on my exits for trades, what I'm looking for. If things aren't happening soon enough, most likely it's going to turn against me with such a tight stop. I think that's one of the differences too that I learned is that you have the tighter stop loss you have, the quicker you're going to have to enter and exit a trade. Versus if you have a much wider stop, you can wait for those moves to play out. So eventually it would be kind of cool if, like, say I take one trade in the morning, that's more of a scalp kind of thing, quick 1 to 10 minute trade. And then I look for that opportunity to take another trade that I could potentially hold all day for a bigger move. I think that would be a really great strategy to have because you're capturing two sides of the market. And because I swing trade, it kind of makes sense to me about holding something, longer, as long as, you don't hold it so long it turns against you. But just having clear, exit points. And if it gets to that, great. If it doesn't, you close your position out at the end of the day or sooner if it makes sense too. So anyways, guys, feel free to check out my day trading resources, the things that have helped me thus far in learning how to trade. Because a lot of people ask, who was your mentor? How did you learn how to day trade? What do you day trade? I just day trade stocks and ETFs. I don't do Forex, I don't do futures, any of that stuff. But you can see the resources down in the comments or the description below. You just gotta put in your email and you get access to my working Google document that I will continuously update. So keep that link handy. And if you guys have any questions, feel free to put them in the comments. And how was your day? Did you have a red day? Did you have a green day? I think just kind of separating the days and the weeks out, not focusing too much on like one individual trade that didn't go the way you wanted. It helps to look at that overall picture and just kind of see, okay, where am I at? What do I need to make adjustments with, So anyways, guys, I'll see you in the next one. Take care.